Hello everybody, welcome to this special presentation. Today we have the honor to host Mr. Jean-François, CEO of BioAmber. If we take a look at this company though, technically speaking, the new entry point on that stock will be around 1240. Right now the stock is trading around 1215, so it's near starting a breakout. So Mr. Hugues will tell us why this company should represent your next investment. Mr. Hugues, thank you for coming by.
Thank you, Chris.
Excellent.
Thanks for having me.
No problem. Now let's talk about the agreement you signed with Vinmar. $10,000 tons per year over the last 15 years. Can you give us some details of how it's going to work out? What are the cash flows that BioAmber will generate from that agreement?
Sure. So we recently announced a deal with Vinmar. Vinmar is a very large privately held company out of Houston. They have close to $5 billion in revenues annually. And we signed actually with them a contract that covers 3 plants. The plant that we're nearing completion on now in Sarnia that will come online in the beginning of 2015. And that's 10,000 tons per year of product that they've committed to buying over 15 years. But it also covers 88% of the output from a next plant that will produce 170,000 tons of product per year, and then a third plant that will produce 200,000 tons of product per year, and they've committed to buying 75% or 150,000 tons per year of product from that plant. So if you add up the total tonnage that we have under contract from Vinmar, it represents total sales of over $10 billion over the life of the contract.
Okay. Now, you mentioned those 2 plants, but have you decided yet where the next 2 plants are going to be located? There's one in North America, but where exactly?
So we've announced that the second plant will be in North America. We haven't done the final site selection. There are a couple of sites that we're looking at very closely in the United States and in Canada, and we hope to make that decision by early next year. And the intention is to do a financial close on that plant within the late 2015 and begin construction at the end of 2015, early 2016.
Okay. I know you also have a plant in France where actually you have been running your technology, upscaling the technology for the last 4 years. What's going to happen to that plant in France once the Sarnia plant will be completed and once you actually have the plans for the next plant in North America, the second plant?
Very good question. So we actually feel that this is one of the real highlights of our company relative to some others, that through a joint venture that we established back in 2008, we had our joint venture spend the $30 million in capital it took to build this large demonstration plant in France.
Okay.
We subsequently benefited from working and operating that plant for 4.5 years. That contract comes to an end at the end of 2014, pardon me. And at that point, we simply walk away. The employees are not ours. The asset is not ours, so there won't be a depreciation of that asset. There won't be any labor issues or costs associated. And the owner of that plant, who is our former joint venture partner, they'll simply repurpose that plant and produce other products in that plant. They have a non-compete, so they can't produce the products that we were making there. And then we start up our plant in Sarnia, and all of our customers and all of our needs switch to that plant, and we'll capture 100% of the value by operating Sarnia and then the subsequent plants I spoke of.
Okay. Now, how's it going? Because Sarnia is going to be a big part of your growth now. So how is it going in terms of the schedule, in terms of the financing also for Sarnia?
So Sarnia is evidently critical for us. Near term, that's where we're going to generate our first close to $100 million of top line growth over the next few years. We've been successful in securing the financing for that plant. Since I was last here, we've actually announced another $27 million in funding, non-dilutive funding for that plant, a $20 million commercial loan that we secured with EDC, Export Development Canada, and Comerica Bank, along with Farm Credit Canada. And then we got a $7 million grant from SDTC, which is Sustainable Development Technology Canada, which is an organization that helps fund new technologies like ours that have a positive impact on the environment and are sustainable. And so we have a very strong financial position for that plant. It's fully funded. And we're on track and we're on budget. So right now we will start up that plant. We'll mechanically complete it at the very early 2015. And as of today, we've incurred a significant amount of the expense associated with that plant, and we're still bang on budget. So we're very pleased with the progress, and we expect to be able to start it up early in 2015 and ramp up sales. We've also secured output. We've sold the total output of that plant.
All the output is sold.
So half of it under take-or-pay contract is guaranteed revenues, and then the other half is 3 times oversubscribed with supply agreements that we've put in place. So we're very confident that we can sell out that entire plant very rapidly once we start it up.
Okay. I know your edge is that your small company is innovative, and you also have a technology that makes chemical products in a cost-effective way. Has there been some concerns and some challenges, and from the bringing technology from the plant in France to the plant in Sarnia, because you're going to produce much more tons? Has there been some problems and challenges in upscaling the technology to produce in a larger scale?
So, very good question. We don't anticipate any problems because, in fact, the size of the fermentation that we do in France is very large. It's among the largest in the industry even today. And so the scale up in those fermenters is about 3 times the size, the fermenters in Sarnia. We'll just have more of them. And in the world of industrial biotechnology, you typically see scale up factors of 50, 100, 200. We're doing a scale-up of 3, which in the world of engineering and chemical is very, very limited. So we're very confident that with the 4.5 years of experience we have in France, we'll be able to start up this plant very efficiently, but we're already doing a lot in the way of planning and preparation to make sure that startup is as smooth as possible.
Okay. And now, to maintain that edge, will you intend to actually continue to put some money to your technology to continue to develop the technology, and how much percentage is going to be of your revenues? Because you're talking about $100 million of revenue possibly in the next few years. So how do you intend to maintain that edge?
So we will continue to improve the technology. Think about the petrochemical industry has had 100 years to develop and optimize their processes and get their the way they make chemicals very, very efficient. We've been doing this for about 5 years, so we still have a long way down the learning curve, and so we're continuing to do R&D to further improve the technology. The beauty is that even at this early stage, our cost structure is 50% lower than the petrochemical route that's been doing this for 100 years. So we're on a very strong base, and we have the opportunity to further improve our cost structure, and so approximately half of our corporate spend is on R&D. So on an annual basis right now, we're spending about $18 million a year, and about half of that is towards R&D.
Okay. To actually, in terms of cash, how much cash do you have right now? And for the Sarnia plant, everything is scheduled on point?
So at the end of June, we had $54 million on our balance sheet, not including a number of government subsidies that we have not yet tapped on, or loans that are still forthcoming. And we've just raised another $31 million in this offering that we did last week. So we're in a very strong, our balance sheet is very strong today, and we feel that we have the cash on hand to not only start up and ramp up and become cash positive, but also to prepare for subsequent plants. We're hoping that we can secure a lot of the financing that's needed for the second plant through project debt. So putting debt on the plant level instead of at the corporate level. And the reason we can do that is because we've pre-sold the total output of that plant. So by the time we do the financing, Sarnia will be running and proven out, and we will have most of the production or output from the second plant pre-sold. So that's an ideal situation to go to lending groups that specialize in project financing.
Okay. In terms of in the last interview, I remember like what you said is that because BioAmber do things differently, we're innovative, where you see the resistance can come from is from the chemical industry, because you do things different. So have you guys prepared yourself to actually deal with that situation? Because you're dealing with some big players like BASF or DuPont, if I understand right?
BASF and DSM are two very large chemical companies that are competitors with us. Our view is that you're never going to compete and win against the BASF. What you need to do is have very good technology and be very efficient so that you can take a part of the market share. We're very confident that with the lead we have and with the strong technology we have, we can compete long term and take a portion of this market that's growing very quickly and is going to be a very big market in the future. So our approach is to secure customers like we've done, to continue implementing and building our technology, and to deliver for our shareholders, deliver value so that our shareholders have confidence in us and our ability to execute and our ability to grow revenues and grow profitability. And with that, we'll always have access to capital to accelerate growth and to build more capacity and generate further EBITDA and top line growth.
Are you generating a profit right now, or?
We are not. So we're out of this demonstration plant, we're generating some sales, product sales, which is very important, but we need Sarnia to come online in order to become a cash flow positive company. So we've been a development stage company, and we're on the cusp of becoming a producing chemical company that uses industrial biotech.
So, now, what about your objectives for the end of this year and the beginning of next year? What are they going to be? And because so far when we came in April, you gave us what you were going to do. You actually delivered on that. So actually, some of our viewers want to know, like, can Mr. Hugues deliver again for the next few months or for the next year? So what are the objectives that you'll be working on for the next next year?
So over the next 6 to 12 months, we are laser focused on getting Sarnia completed and up online. That's our primary target.
Do you have a date?
The other thing.
Do you have a date where it could be?
So it's very early in 2015, in the first quarter of 2015.
Okay.
Beyond that, we want to have that site selected for the second plant and start to put around the financing for that by very early in the new year as well, and to start allocating some of the resources that we're focused on getting Sarnia completed, start to allocate those resources to the second project. We're going about this sequentially. We think it's very important not to spread our limited resources too thin by trying to do two projects at the same time. Beyond that, I think my responsibility and some of the people in the company also have to think long term, so we'll be looking at longer term ways to further accelerate revenue growth, further improve the breadth of our product range, the portfolio, and so we hope to make announcements along those lines, along with some very exciting things that we're doing with different customers, new markets, new applications for our products that can further show and substantiate the growth that we're seeing and that we expect to see in the coming years. So we hope to make communications along those lines, joint development agreements, new supply agreements, really strong indications to the market that the products we grow, the products we produce have very strong growth prospects.
Talking of the products, I know like there's succinic acid, there's also BDO. Is there a type of product that you guys will intend to focus where the margins are higher?
With our cost structure, we can generate very healthy margins with both of those products, and we can be low-cost producers of both of those products. So in the case of succinic acid, it's an interesting molecule because there are some applications where it's very much of a commodity and you need to target market pricing. There are also applications where it delivers real value and where you can have value-based pricing so that your average selling price can be somewhere in between the two. In the case of BDO, it's more of a straight commodity. We can produce and sell at the market price. What we can do is generate better margins than the traditional petrochemical players by selling at that price, and the nice to have that we don't build into the price is the fact that our product is renewable. It's a sustainable source of BDO, so it offers for those who take those building blocks and make polymers, polyesters, polyurethanes, whatever they're making gets the benefit of our favorable carbon footprint that comes with being a bio-based product.
So if I understand right, the Sarnia plant could build all those products, right?
The Sarnia plant is focused on succinic acid, the first product. The second plant will produce 100,000 tons per year of BDO and 70,000 tons of succinic acid. So with the second plant, we will have annual output of 100,000 total succinic acid and 100,000 total of BDO.
Okay, excellent, excellent. So, Mr. Hugues, a lot on your plate for the year ends and also for next year. I hope actually you could come visit us, especially when the plant opens.
Absolutely.
Give us a call. We'll be definitely eager to know more about what's going on with BioAmber.
Thank you, Chris.
Thanks a lot.
Thanks.